Let's start with the Micron news. Again, Micron shares surging this morning after some very upbeat commentary and forward guidance. Seeing that kind of move in chips, how do you think that influences the rest of the market? As we mentioned earlier in the show, the NASDAQ up over 1% in the pre-market.
Yeah, technology is still in the lead, Frank. I think that it is a market that wants to continue to move higher, right? So as you just summed up in the previous segments, you have cyclical forces coming together, whether it's China stimulus, or whether it's the Fed lowering rates, or just overnight the Swiss central bank lowering rates against a company like Micron upgrading its outlook, coming together. And then I think particularly it just does express itself in the sectors that have the most growth, which is in this case the technology sector, even though there's, I think, rotation underneath going on. Because if you look at what happened in China, with all the stimulus, you're seeing the materials and staples, for example, rally on the back of that. That will also have effect on our materials, the staples sector. So I think it's a cyclical recovery coming through the markets currently.
All right, so you see a cyclical recovery. You're also watching central banks. You were touching on some of those European central banks. I want to come back to the U.S. Fed. We're going to be talking about this a bit later in the show, but we have a lot of Fed speakers out today. 8 of them, including, Michelle Bowman, the lone dissenter in the last meeting the Fed had. What's your take on some of this commentary from the Fed? Are you concerned that it might be too influential to the markets?
Yeah, it will be influential because, if you take the speech from Kugler last night, I mean, she really made the emphasis that the Fed is watching a lot of labor indicators now for downside momentum. And she makes, I think, really a signal about that the Fed's willing to step on, quote unquote, the accelerator, meaning going faster with rate cuts to arrest the rise in the unemployment rate. Whereas you have Bowman on the other end of that saying, well, if you do that, there's obviously a risk that it's not going to go out with a free lunch. Right? We're going to get some inflation coming from the back of that. So these Fed speakers are trying to balance each other out. But I do think on balance, Frank, that this is a Fed that really wants to move a little faster here to make sure that the unemployment rate stays at this 4% or so, about to not get an unemployment rate that moves away from them. Yeah.
Ben, you just mentioned inflation. Obviously, we get PCE tomorrow. Those inflation concerns, thoughts, however you want to describe them, they've led to yields on the long end of the bond curve moving higher. How do you look at bonds right now? I mean, are you seeing any opportunities in bonds? Because we've seen the short end where yields seem to be declining, but on the long end, they seem to be rising. If you were to invest in bonds, I don't know if you are or not, where would you see the opportunities right now?
So I do think, Frank, that the long end of the yield curve is expressing this effect of the rate cut on the economy. There's really pricing in potentially a bit of a stronger growth picture into the fourth quarter. So I do think the 10-year could reach a 4% or about, or maybe a bit higher. Whereas on the short end of the yield curve, you get the expectations that the Fed may go a little faster with rate cuts. So if you want to buy bonds, you want to be in the short end to the intermediate part of the yield curve. That's where the return currently is. Because the long end will reflect strength of growth with risk of inflation. So I don't think that's a good place to be. So be careful with this duration risk in your portfolio. Stay on the short end of the yield curve.
All right, so you're saying be careful when it comes to bonds. What about gold? We continue to see gold hit new records. How do you view just the whole commodity space right now? We're seeing gold hit new records, a lot of volatility in the oil space as well.
Gold is interesting because it reflects on the one hand the easing of the Federal Reserve and other central banks, right? Brings rates down, tends to be good for gold. And there's uncertainty as we go into this final month before the election. Yeah, gold gets a lift from that. On the other hand, you have energy that's really under pressure. As the news comes out, OPEC is going to potentially increase supply. You're getting an oversupplied market. So very bifurcated picture in commodities, which essentially means that low energy prices means potentially more downstream inflation, lower rates, which fuels gold going therefore higher.